Hello and welcome to WBN's Global Voice, a round-the-world discussion with WBN CEO Olga Collins, where she talks with 6 WBN board members leading businesses on 6 continents. With renewal season and, dare we say it, the worst of COVID behind us, how is the market shaping up and what are they seeing on the ground where they are? Here's Olga.
Hi, I'm joined today by Damien Honan, the Executive Chairman of Honan, one of the original members of WBN. Hi, Damien, how are you?
Hi, Olga, how are you? Nice to see you this side of the world.
Good to see you. We'd love to hear from you about the market as you see it for Australia and New Zealand especially. You just finished a big renewal season, so how are things?
Look, a lot of it, I think, follows the rest of the world. Professional lines market, D&O, is still trending upwards, and although not at the same rate it was in, say, the previous 2 years, but still there are trends showing increases. The big difficulty in the market is increasingly cyber insurance. That's become problematic. I think problematic for several reasons. Problematic because claims and underwriters, insurers are really starting to get claims through that perhaps they really didn't think were going to happen 2 and 3 years ago. Secondly, I think now the insurers are starting to understand how good or not good, depends which way you look at it, people's protection or their risks within their companies are and how professionally they're run from a technology point of view. And I think it's becoming an awakening how much companies really have to start increasing and spending on technology. The technology is part of their risk framework now, as opposed to enabler it to help them do business. It's actually part of their risk framework now, and I think that's starting to sink home with companies, whether large or small. So that's probably the big change. Property's still slight increases. Casualty's okay, not too bad, but property's still trending upwards for those risks that insurers don't want. And anywhere where there is, I guess, the effects of climate change, or whether that's real or perceived, that's becoming problematic. So 2 areas near the coast, so areas where cyclones or prevalent, or bushfires are prevalent, those covers are becoming, or have for a while been very difficult to place, and that hasn't changed. In fact, it's getting more difficult. So that's the major areas of concern. But all other areas of domestic insurance is the same as it has been, and health insurance is trending up, which is just related to claims, what claims are, and it goes up 5 or 8% depending on what it is. So yeah, but I don't think our market, New Zealand and Australia, are any different, broadly speaking, to the rest of I'll say the United States.
Yeah, thanks for that. So over the last few years or going forward, do you think there's going to be shift in what the clients want? What kind of service or consulting they're going to focus on?
Yeah, I think COVID the last 2-3 years now is changing. Well, certainly changed our business, and I think the insurance broking business is a great reflection on so many industries, and it's changing our view of not only how people work. I think that's the main conversation. Everyone talking about working from home and how people are going to work, but I think the next conversation is about what your insurance broker / risk manager, what they start bringing to the table, and they've got to start bringing I'll say more information about helping companies operate and the risks they're exposed to because of something suddenly stopping, whether it's supply chain risks or staff not being able to get to work. I mean, it's so broad about what's going to happen, and I think we have a great opportunity to start, in some respect, forecasting. If this happens, we'll have to look at doing different things, as opposed to I guess previously, my building burns down, what do I do? Or I have a big liability claim, what do I do? And all those responses have been, I guess, thought out over the last half century or so. And now I think the next thinking as us as risk managers is going to become more predictive as opposed to responsive.
I'm so pleased to have Neil Raymond with us today, representing our APAC region. Neil is the founder and CEO of Pacific Prime. Neil, how are you today?
I'm great, thank you. Yeah, super, thank you.
It's really wonderful to watch the expansion of your firm throughout the region and outside of the region as well. So I'm very excited to ask you some questions that are region specific. How have the renewals been for the recent renewal season?
2021, if I was to sort of categorize that broadly, I think that if I split that into EB and P&C, EB has been remarkably robust. We've generally seen a slight reduction in headcount depending on the industry. So obviously hospitality has been hit, but some sectors have done really well. So some of the professional service sectors, finance, legal have done well. But if we've seen anything on the EB side, it's probably a reduction in headcount, but not a reduction in benefits. So HR has not gone after cutting benefits. The cost management from the client's point of view during the COVID era has been really around headcount control, not benefit adjustment. The P&C side has been more challenging. Generally, that's kind of the other way around. We haven't seen so much of a reduction in policies, but we have seen very tight pressure on pricing. So people have kept policies in force, but they've reduced the cover slightly, or they've been very aggressive on benchmarking and pricing. So those are the broad kind of, I think, themes within the P&C and EB sectors that we've seen around Asia in the last 12 months.
Do you see tightening in the capacities as well?
Yes, but I think that is to a degree in Asia Pacific around compliance. I don't think, I certainly haven't sort of felt it from a sort of pandemic COVID point of view, but what I have seen is a tightening of regulator activities around global organizations, global insurers tightening up their compliance. Things they would have done 2 years ago, they're now not happy to do. So our issues around capacity are more around an evolution in the compliance market than it is around anything else, I think.
I am so excited to have a minute to speak to Walid Neme from Associate Insurance Consultants, who are members in various countries of the Middle Eastern and African region of the WBN. Hi, Walid, how are you?
Hi, Olga. I'm fine, thank you. And I would like to wish you all a happy new year.
Thank you, same to you. I'd love to have a conversation about where you see your markets. Many of the renewals are just behind you. So what are the trends that you're seeing?
Yeah, we are in a very consolidated market now. The rates are going up, especially on property and on cyber risks. This is across all the Middle East and Africa. Insurers are taking a hard position on those lines. To the contrary, on the employee benefits, we are seeing a stagnant market, no hardening in rates really. On the liability as well, on the casualty as well. So basically, it is mainly for aviation, property, and cyber risks, where we are seeing hardening in rates, and insurers are really pushing hard for increasing rates.
That's really good to know. How is the capacity?
On the cyber, there is a reduced capacity, which is pushing the rates very hard. On the property, we believe that this is mainly due to there is a lot of talk, as you know now, globally on the changing weather, which is leading to to increased risk for storms, tempests, all that changes that we are witnessing, and this is pushing the rates on this is why the rates on property are pushing hard. There is definitely a reduced capacity in the market. Definitely. You know, Dubai is a hub for multinational reinsurers for the Middle East and Africa, and many of them are now consolidating their operations. Some are withdrawing from the market and moving back the capacity towards their head offices or to Singapore. Some are opening in Dubai, but it's if you take it global, if you take it across, there is a reduced capacity, definitely.
I'm so excited to be joined by Florian Karlev from our Südverse team in Germany and Austria, but representing our conversation in the European region. I wanted to talk to you a little bit about how your world is going. Obviously, we finished a big renewal season. What have our clients and your teams faced during these renewals?
Yeah, I would maybe give a general overview of the European community. So I think when we're looking back about the last 24 months when Corona started, everybody was a bit scared what that will do to the economy. And at the very end, I would say the economy is still doing very good. Everybody's a bit worried about the inflation, and inflation would maybe put down interest rates, increasing interest in the future. So that's maybe a little worrying to investments. But overall, I would call the entire economy is doing good. What is really struggling is travel, global aviation, all kind of cross-border things are difficult these days. And I was fighting, when I was young, I was fighting for the EU, getting the borders down. So we love traveling here. And that's maybe the biggest impact we have, that traveling has become a little bit more difficult. Having said that, most of the companies and most of our clients, we're lucky, are doing good. There's some threats behind. There's some, I think, customs is a big threat globally, especially between the US and China, and we're in the middle of it, whatever that means. Some borders are not safe enough for us, so immigration is still an issue, and we have two parts which are arguing. One part is we have a gap of people working, and the other part says we don't want immigration. So we know by 2050 that for our market, for Germany, we're going to reduce down the people from 83 million to 60, which automatically reduces down the workforce. And who should do the job then at the very end? And we had that all in phases over the past decades, that in those phases where the baby boomers were gone, that we need to look where we get workforce from. And that's what we are maybe, where we have a global threat also, where are the people coming who do the job in the future? That's one threat. Second, I would say, considering the weather, where you're interested in talking about CatNat, is something becoming more and more unpredictable for the industry. On those standard lines like property and casualty, I would say the prediction is pretty good. On natural catastrophes, it's increasingly high, and the prediction is not as good as. And if you look on the German market, we had a very, very bad flooding in 2021, extremely bad. Most of those companies and most of those people living there, about 70% had no insurance for it. And that's maybe something, if you look on the market from a macro perspective, there's still a lot of companies not insuring natural catastrophes properly well. That's one thing. The second is carriers have reduced down, as maybe also the predictability is not as good, have reduced down the capacity. So lower capacity with higher prices are impacting the market. That's something we're a little bit worried about. We work on globalization. We try to get as much as capacity from all over the world to give it to our customers. But that's something which goes anti-cyclistic. Companies want to do better business and more safe. And then if you don't give them the enough capacity for insurance, then they are maybe have another threat which could be prevented, which could be where the companies could maybe have a better, a safer environment with a better insurance in the back. Lower capacities and higher prices in days where the economy is somehow volatile are very difficult for us as brokers to sell and to tell the people why is that now. If you look in the books of business, if you look on the balance sheets of carriers, some of those, especially on property and business interruption, global supply chain, are pretty red. Efficiencies there. If you look at market, we had a very big loss, on marine cargo in the Suez Canal, which had big impacts on containers. The automobile industry is struggling especially on technical parts, technical equipments coming from Asia, taking long time to get here. Cars cannot be delivered. That's where the German economy is depending on. The French economy is much depending on. So there's big impacts right now, and we try to help our customers to solve that better.
Very excited to have with us Gabriel Rico Cardenas from FedEx in Mexico, representing the Latin and South American region. How are you, Gabriel?
Very good, Olga. Thank you. Thank you for the invite.
Yeah, thanks for joining. We are at the end of a renewal season. How are you seeing the market in your region?
Well, it's kind of the market in general. You have to talk about different areas. Of course, the market is huge. I mean, we are talking about P&C or we are talking employee benefits, but in general, if we come from 2020 and 2021, where in 2020 we were hit by the crisis, by the pandemic, and there was lockdowns and some operations slowed down. Some sectors or business were really harmed, like the construction sector, like the hospitality sector. And fortunately, I mean, it's coming back. In general, if I can talk about the region in that year, and especially in Mexico, the GDP, fall 8%, 8.5%. So it was a big fall. We recovered part of it in 2021. Basically, we grew around 4.5%, and we expected to grow 1.7% next year, which, I mean, at the end of the day, it's not. We are not recovering yet from what happened in 2020. But in terms of the market, I mean, which is directly, I mean, affected by the economic part, in general, we have seen from the last few years a lot of restrictions in capacities, a lot of restrictions in certain kind of lines. We can talk about financial lines like cyber and crime, where, I mean, a lot of companies on some of the markets step down from those lines, but still there are some capacities, and more underwriting information that you need to provide. But I think at the end of 2021, we start to see more capacity deployment. I mean, the companies are trying to open a little bit. Hopefully, it will be a trend for 2022. But that's how we see it in the P&C part. Of course, P&C is huge if we talk about property, if we talk about cargo, if we talk about automobile, or we're talking about surety. Each kind of the lines, I mean, have their own experience, but in terms of property, in terms of financial lines, that's what I see. And with respect with employee benefits, health insurance, and life insurance, of course, those are some of the lines that were hit by the pandemic. At the beginning, we didn't know how much it was going to be affected, but at the end of the year, this year, we noticed that huge amounts were paid in claims in terms of health. And now we're starting to see some restrictions, which at the beginning, all of the companies, I mean, supported and provided coverage for COVID in general. I mean, in terms of health, there wasn't any. I mean, there was some concern at the beginning, but the companies stepped up and provided coverage in general. But just in this year, we started to see some companies asking for vaccination to provide certain limits of coverage. I mean, if you are not vaccinated, I mean, you will be limited in some part of the coverage for COVID. So those those actions are taking place right in the moment. So that may have some kind of impact in terms of underwriting. I believe, in any way, I mean, the market is expected to grow 4% on the EV part in general, which is good. I mean, we are talking that the economy is growing 1.5%, and that's something good for the region. We have to understand that our region, it's a region, it's a underdevelopment in the development region in general. So we have that gap. I mean, of opportunities that still face the region, where in other regions, mature regions, I mean, the growth may be a little bit smaller and more contained, but in general, that's what I see in terms of growth and in terms of capacities. Hopefully, I mean, we're starting to see some more capacity, some more flexibility on the underwriting part of the business.
I am so excited to be joined today by Susan Murphy, who is the president of Hub International Limited, a member of WBN, and also a board of directors representative from Hub Canada and the US. How are you, Susan?
I'm great. Thank you, Olga. Thanks for having me. How are you?
Good, good. I know that the fourth quarter is extremely busy with the renewals. I wanted to check in with you and see how has the team fared? What are you seeing as far as rates, as far as products?
Great. Lots to unpack there, but I'll cover a couple of key points that are certainly relevant to Hub and our clients across North America. I'll talk a little bit about the US and Canada. So if we look as we closed off 2021 and we're moving into 2022, one of the indicators that we certainly use is what our treaties look like, our reinsurance treaty renewals look like. And that typically for us is one of the indicators of what we can expect in the upcoming year. So when we looked at the treaty renewals, many of them January 1st, we did see rate increases, small rate increases in many lines of business, and then significant rate increases in other lines around CATs, weather-related, flood zones, etc. So with those renewals, it certainly suggests and indicates to us at Hub that we are going into another year of rate increases in some of the more difficult areas of North America. So those that are flood zones, weather issues, fire, etc. And that would also impact our real estate and realty portfolios. So we're still expecting that will be a challenge for us going into 2022. Some of the other lines of business, it looks like they may be coming in flat or minor increases. So overall, we are expecting less rate increases in 2022 than 2021. So with that said, if we flip that and we say, what does that mean for our regulatory environment? I would say in the US, you know, we have a lot of that we have to do by state and the regulations. I don't expect significant change there. However, the concerns that we have in the US, not as much in Canada, but we're starting to see some of that trending, is not so much around the regulators, but it's more around the courtrooms, the judges, and the settlements. So we're hearing a lot more in the US space around nuclear verdicts, which is causing major heartburn across the industry for brokers, insurers, and our clients. So if we're looking at nuclear verdicts where we are seeing juries awarding over $10 million in some cases for some of these claims, you can understand what that means for our insurers and for ultimately our clients. So what does that mean? We're seeing this more and more. And so we're watching the courts and the juries and seeing what that means. But this is not a trend that it will not be going away, certainly in 2022, which will create significant challenges for us. And ultimately, we know that if we're getting awards of over $10 million, that has to be paid in some way, and that's going to come back around and increase the cost of insurance. So that's the big challenge for us. In Canada, when we look at the regulations, it's by province. And if we look at BC is very different than Ontario, but you know, when it comes specifically to auto insurance, there's a lot around that as the insurance company and the broker that represents a client, that you know we have to, there's this regulation that's basically take all comers regulation. So from an Ontario perspective, we are required to provide quotes based on filed rates that the insurers have. In Ontario, BC, it's government run auto, so it's very different. But I just say that because it's important to know that even with COVID, we have had a significant increase in complaints to our regulatory bodies in Canada and the US around the lack of affordable insurance. And so the complaints have gone up astronomically. And what that does, and it may not do it now immediately, but as you can appreciate, when we start having the regulators get involved in that and what that means and start telling us how we're going to be able to offer or what we're required to do, then we know that the end result is, if they get involved in that, it creates a huge problem for us in the industry and for our clients with respect to choice, pricing, capacity, and quite frankly, even coverage. So that's a huge challenge for us as well. So we're starting to see that, and that will work itself through, but it will take time. So we don't know yet what that means. And then when we look at this from an economic perspective, if we're talking about the effects of COVID and those individuals in the insurance industry coming out of it and what it means for our industry, we are still forecasting from our lens in North America for 2022 to be a growth year in our industry, as was 2021. But the concerns that we do have are around, as the government support starts to disappear, which is starting to happen now, then for a lot of those industries that have been able to make it this far, once the government subsidies stop, what does that mean? Are we going to have more businesses close, more small businesses close? A lot of our economy is driven by small business. So what does that mean? So I would suggest, and certainly our view is that we have not yet seen the long tail effects of COVID, and we're probably not going to start to see them till later in 2022. And we think that that's going to trickle out to 2022 and 2023 once the government subsidies and support are removed, and then that becomes a big challenge for us. But then we look at the industry and the opportunities we have and the competitive landscape, and you know, we look at what that means and what we should be investing in. And it's all around, you know, not our brokers, our consultants being recognized as experts in what they do and being professional consultants, similar to our accountants, our lawyers, et cetera. But in order to be viewed that way, we need to make sure that we are truly leveraging our data and our technology. So what are we doing with access, ease of access for our customers. How are we identifying our true risks and exposures by province, by state, by territory, using the mapping system that supports us with weather mapping, CATs, etc. And what does that look like? So as brokers, we need to become more and more sophisticated. We need to invest in technology, data analytics. We need to leverage that for both our clients and our prospects. It helps us so much more with risk mitigation, engineering, etc. So those of us who aren't going to do it will probably be marginalized, and they may not be embraced and perhaps not survive at the same level as those of us who are able to rise to that and be recognized as true professional partners for our clients. So the continued investment in that, while significant, is absolutely critical to not only our well-being and our health and our longevity, but to support the clients in the capacity that we need to going forward as we see the changes with weather, CATs, the overall global industry, pandemics, etc. So that is a big challenge for us and a huge investment in the industry, and it will help us partner with the insurers and others as well.
Oh, that's great. Thank you so much. You certainly touched on a lot of hot topics and catering to the ever sophisticated clients and providing creative solutions while attracting the right talent and keeping talent is certainly a challenge in these times. So I'd like to thank you for your time today. I really hope to see you at our next global conference coming up in San Francisco in April. Stay well and all the best.
Thank you, Olga.